Hey everyone, it's RA, and look, we all know the market moves in cycles, right? What goes up must come down, and there are signs that another big shift might be just around the corner. I'm talking about a potential peak, maybe even a correction or bear market as early as mid-2025. Now before you freak out, remember, I'm not saying this to scare you, I'm saying this to prepare you, because whether you're into crypto, stocks, real estate, or even gold, understanding how to navigate market volatility is key to building long-term wealth. So in this video, we're going to break down exactly how smart investors are getting ready for what might be coming next. Now you might be thinking, RA, why are you even talking about mid-2025? That's years away. And yeah, you're right, it is. But here's the thing, markets move in cycles, and if we look at historical data, things start to line up in an interesting way. We've had a pretty incredible bull run, but many analysts are saying this level of growth isn't sustainable forever. We're seeing inflation creeping up, interest rates are starting to rise, and even though the economy seems strong, there are always underlying factors that can change things quickly. Think about it like this. Remember back in 2000 with the dot-com bubble, or 2008 with the housing crisis? Those were periods of massive growth, followed by sharp corrections. And while history doesn't repeat itself perfectly, it often rhymes. Now I'm not saying that mid-2025 is going to be some catastrophic market crash. What I am saying is that it's crucial to be prepared for any eventuality. The key takeaway here is that cycles are natural. They're a part of how markets work. And understanding where we are in the cycle is the first step to making smart investment decisions. Remember, it's not about timing the market perfectly, it's about time in the market. And by preparing for potential downturns, you're actually putting yourself in a better position to capitalize on the eventual upswing. So, let's talk about how to actually get ready for a potential market shift. And the good news is, it's not about panicking and selling everything. It's about being strategic and playing the long game. First up is diversification. This is probably the single most important thing you can do to protect your portfolio. You've heard it before, but it's worth repeating. Don't put all your eggs in one basket, because if that one basket falls, well, you're in trouble. Instead, spread your investments across different asset classes. Stocks, bonds, real estate, maybe even some alternative investments like art or collectibles. The key is to create a portfolio that can weather different market conditions. Next, we've got risk management. This is all about protecting your downside. One of the best ways to do this is by using stop-loss orders. These are basically preset orders that automatically sell your investments if they fall below a certain price. It's like an insurance policy for your portfolio. Another risk management strategy is to build defensive positions. This could mean holding more cash, investing in less volatile assets like bonds, or even short selling if you're feeling really bearish. And finally, we have position sizing. This is about how much you invest in any one opportunity. The key here is to never overextend yourself. Don't put all your money into a single stock, no matter how promising it seems. Remember, even the best investments can go down. Now you're probably wondering, RA, what are you doing to prepare? Well, I'm staying cautiously optimistic. I'm still bullish on the long-term prospects of the market, but I'm also realistic about the potential for a correction. So, I'm doing a few things. First, I'm making sure my portfolio is properly diversified. I've got a good mix of stocks, bonds, real estate, and even some alternative investments. Second, I'm using risk management strategies like stop-loss orders to protect my downside. And finally, I'm being very careful with my position sizing. I'm not going all in on any one investment, no matter how tempting it might seem. The key here is to find a balance between offense and defense. You want to be positioned to profit from market upswings, but you also want to be protected from potential downturns. It's about building a portfolio that can handle whatever the market throws at you. So, what's my outlook for the market? I'm cautiously optimistic, but I'm also prepared for anything. And that's the key takeaway here. Don't be scared, be prepared. Market cycles are a part of investing. They always have been and they always will be. But by understanding how cycles work, and by taking steps to prepare, you can weather the storms and come out stronger on the other side. Now I want to hear from you. What's your outlook for the market? Are you bullish, bearish, or somewhere in between? Let me know in the comments down below. And if you want to stay ready while others react and learn more about navigating market volatility, hit that subscribe button and ring the notification bell so you don't miss out on any future videos.